This India is different from what it was in 2013. No, this is not a BJP's campaign slogan. In fact, a leading US-based global investment bank, Morgan Stanley, has cited such a phrase in its recent report titled India Equity Strategy and Economics: How India Has Transformed in Less Than a Decade. Hello and welcome, I am Shreya and you're watching The Pamphlet. Managing Director at Morgan Stanley, Ridham Desai, has authored this report. He has highlighted how India has gained a position in the world order in a short span of 10 years. 10 significant changes have been reported that were only possible due to India's policy choices and had significant positive implications on the economic market. Let us quickly analyze these decisions which paved way for India on becoming a global economic superpower. Supply-side policy reforms. Here, the government has lowered corporate tax rates to 15%, with an infrastructure pace seeing an all-time high percentage prior to 2014. Notable developments can be seen in the graph in the sectors like national highways, infrastructure, broadband subscriber base, renewable electricity, and electrified railway routes. Significantly, sterling performance in GST collection and high percentage rise in digital transaction has formalized the economy. The promulgation of Real Estate Regulation and Development Act has helped the consumers of home buyers and contributed to the growth of real estate sector. We can see in this graph how the new launches and new sales have increased in the past few years. The grand success of the direct benefit transfer scheme under the incumbent central government has helped in improving the conditions of the vulnerable sections and targeted the subsidies without any leakages. The last mile financial inclusivity has been a game changer. Clearing the banking debt through insolvency and bankruptcy code and the restructuring of corporate debt has lowered its percentage of GDP to 50% in financial year 2023. Narendra Modi has been called an inflation hawk by Ridham Desai, who has helped control inflation in the past by changing the mandate of the central bank, who was solely focused on flexible inflation targeting. We can see in this graph how during the financial year 2009 to 2014, inflation hit an all-time high due to the UPA government's loose fiscal policies. Special emphasis and focus has been laid on the foreign direct investment in the country, which has clearly increased due to the liberalized government policies and improved ease of doing business. In India's 401k movement, we can witness how there has been a growth in flows in systematic investment plan and domestic mutual funds that has helped reduce the reliance on foreign portfolio investments. In the government support for corporate profits, they have accelerated at a good pace. Looking at the graph of MNC sentiment of multi-year high, we can see how the offspring industry has accelerated its growth due to India's growing share in the world market. All these big changes will have a notable implication on the macroeconomic branch, with a steady increase in manufacturing and capex as a percentage of GDP by approximately 5 ppt by 2031. India's export market share is also expected to rise nearly twice from 2021 levels, which is 4.5% by 2031. This in return will upsurge the goods and services exports. We could also expect a major shift in the consumption basket as India's per capita income increases from $2,200 to about $5,200 by 2032. We could also expect a lower volatility in inflation and shallow interest rate cycles. Triggered by supply-side reforms by the government, we can now expect a major rise in the investments and an increase in credit to GDP to support the coming profit growth. As stated in the report, the policy changes have also led to a profit boom for corporate and stock market investors and a breakdown in correlation with global oil prices. A few key risks that we can expect and can surely strive to overcome are a global recession, a fragmented general election outcome in 2024, sharp rise in commodity prices due to supply outages, and shortages in skilled labor supply. The visionary policy changes by the Modi-led government will see a massive and favorable expansion of economic indicators in every area over the coming years, including discretionary spending, energy, oil, and financial services. India is expected to emerge as a key driver for Asia and global growth. A new India, through the right imagination and intention, will drive a fifth of global growth to the end of this decade. Thank you for watching. If you like the content, do like, share and subscribe to our channel, The Pamphlet.